Hey everyone, Mark here, and welcome to another Greenbridge Investing Market Analysis. So today is Monday, starting off the new week, and what we're going to be going over, of course, is Bitcoin, the major markets, and stocks that you want to see. Now, I know we had some questions in the chat room, and I'd like to go over them here so I can answer them in more detail. If you're new to Greenbridge, make sure you check out our website, greenbridgeinvesting.com. And you could check out our free membership there and all our stuff that we have there. Also, again, as I'm doing this, please feel free to ask questions. That's the whole point. I don't share specific trade ideas in these videos. Those are for our members. But I will review the outcome, like we're going to talk about, some of these things going on here today. All right, so hey everyone. Hey Nicholas. So with that being said, let's get this thing started. All right, we do have the podcast today. Here, so let's just do this. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Got to get that in there. All right, so now keep in mind, we do have the podcast today at 4:05 p.m. Eastern Time. If I can't get to all of your questions in this session, please come back to our channel, check out the podcast. Like the video if you like it, like the podcast, and participate, ask questions, because we have some interesting things to go over, especially in the stock department today. All right, so as you know, today is Monday. Now that's the Bitcoin chart, right? But those of you know that Monday means economic calendar day, the boring economic calendar. It's important though, because especially for Forex traders, that's why I make sure I check it at least on Mondays. Because if we're in a Forex trade and some rate decision is coming out or an FOMC meeting or something, I want to know so I can adjust my risk or perhaps avoid taking a trade signal that otherwise I may have taken because I don't want to get caught in the news event. Okay, because a lot of times they are catalysts for a range expansion, but that range is random. All right, so let's take a look what we have going on. Again, I'm not going to spend a lot of time on this calendar, but early in the week here, we don't really have anything. Okay, Germany, industrial production. Okay, I mean that's all going to affect the euro. Gross domestic product for the euro. That's not really a big deal. We're waiting for the euro to pull back, by the way. We want to buy the euro, okay, but we're not going to buy it at the current levels. So we need to see a retrace. Now, in the US, we have consumer price index, this one over here on 6/10, which is in 2 days. That's at 8:30 a.m. Eastern time. That can have an effect if there's any kind of surprises. But again, for years, like this kind of report has been pretty much a non-event. So I wouldn't make a big deal out of that. But this one is a big deal. The Fed interest rate decision. All right, and that's at 2 p.m. Eastern time on Wednesday. Now, and the press conference, the FOMC press conference. If there are any surprises here, the market will move. So obviously there's an expectation, right? Well, previous. And the market has baked in its expectation. So there can be a surprise. And that's where, the Nasdaq and the S&P, they can have a large move in one direction very quickly. And you want to be very careful going into something like that. So what does that mean for us? Well, we're not going to be going crazy buying stocks going into this. We have some stocks that we're in. And, again, something like this is enough of a catalyst to potentially turn the market. And the market is at vulnerable levels. That's why this is so important. So it would be good if the best outcome would be a non-event pretty much. And then we can just continue along with our levels and everything else that we're doing. Now we have jobless claims, initial jobless claims here. What is that, on Thursday? And that's really, okay, again, any surprise in there can have an effect, but that's typically not a big market mover. And then for the GBP, the British pound, we have the industrial production and, their GDP. Again, no big deal there. In this Michigan consumer sentiment, no big deal. Those are typically not very eventful reports. So that's what we have going on this week. So the FOMC meeting is really the big one there. Okay, and we're going to be keeping an eye out for that. So now let's take a look at Bitcoin. Again, if you have any questions, please feel free to ask as I go through this. Now, I wrote a report on Saturday about Bitcoin, and we had a great question in the chat room about that report. And I believe that question came from Yavor. Yavor, thank you for asking that. So I'm going to address that here. Thank you for coming to the session. So the question was, you know, the buy signal, there was a buy signal which I talked about, which was what, this 97.44 break of this little inside bar. And the question was, why would we not take that, basically? Or, you know, why would we wait for a higher price if the buy signal's there? Do we need more confirmation? Hey, Ankit. And that's a great question. Here's the answer. Not all buy signals and sell signals are equal. Just because there's a buy signal doesn't mean we buy. Just like, you know, there's plenty of sell signals here. You don't see us selling. We're completely ignoring those sell signals. But the question is, you know, we know that Bitcoin's strong. It keeps making higher lows, and it's consolidating inside this resistance between 95.64 and 10.168. So those are all, that's a hidden sign of strength. And that's another important point that I made on that video that I made for TradingView. And the reason why we won't take that buy signal is the location. Remember, we're long, right? We had that 9600 or 9610 signal that Andrew sent out the previous Saturday, not the recent one, but the one before, which was sent out back here, okay, on this inside bar break back here. And we exited at 10,200, 1/3 of the position. Hey, Michael. So because of that, one thing we don't want to do is we don't want to get too long, meaning we don't want to keep issuing more and more buy signals, especially if we're in stuff, right? We don't want to be putting on more and more risk, especially at this location. The location shapes the quality of the signal immensely, and a lot of people don't realize that. So that's why a buy signal, you know, compared to other buy signals, certain ones are better than others. You know, a buy signal near the 8,500 support has much more potential than a buy signal inside of this resistance zone. That's how we judge them. So that's why, you know, Andrew was saying we need a break of that 99, whatever level he was talking about in the chat room, to really confirm that this resistance zone is going to be cleared again, because obviously it's a tough zone. And the risk is high here, especially since 8,500 is our first inflection point. That was really where the greatest opportunity will appear if Bitcoin wants to give that to us. Okay, great, Ankit. And that's a good idea. There's nothing wrong with reducing risk. This is a resistance area, and we're still bullish on Bitcoin, but this thing would be better off, you know, at least a new opportunity would be more attractive and prompt us to send out a new signal if we can retest this inflection point rather than take a buy signal up here. Now, look, Bitcoin may not give us that opportunity. It may squeeze from here. Some little catalyst can come out. Next thing you know, it's pushing 10,000. That can come out of nowhere randomly. So you have to, that's why it's like, do we get out? What do we do? This and that. We try to take ourselves out of the equation as much as possible and let the market determine the outcome. We have our stop in place for that aggressive trade, and the market will determine if that trade is going to work out or not. We're not going to sit there and overthink it. Okay, so I hope that answers your question. And that was a very good question you bring up. So that's Bitcoin pretty much. We have these higher lows here, and as long as they stay in place, I mean, it's still strong. And the fact that it's lingering at a resistance zone is also another sign of strength. 160 million are long. It's 136 million. Yeah, well, you know, that's interesting. A lot of people obviously think it's a long, but the key thing is this. $136 million, right? Here's the thing, you know, don't always get too caught up in statistics, because, I mean, Bitcoin can pull back at any time and it doesn't matter, right? And then you could say, oh, they're pushing out the longs, this and that, and whatever. But the point is, it's in this resistance zone and it's lingering. Typically, when a market is in a resistance zone, it doesn't spend a lot of time here. It sells off quickly, and that's not happening. That's why I still believe the bears are wrong, and I believe they're going to get squeezed again. So we just have to see how that plays out. Okay, so, and again, that's not an opinion. That's just what the market is telling me until the market gives me evidence of something else. And that's what I go by. All right, so I talk too much. Let's move on to something else here. Again, if you have any questions, please let me know, and I will answer them here as I go. So let's talk about the stock market. Now, I'm going to begin here with the Nasdaq. And the Nasdaq has been interesting because it's been in a vulnerable location. It pushed those dramatic highs, okay? Nasdaq 100. So here's the Nasdaq 100 CFD, which is what I like to look at. And here we are again, pushing the high or at the highs, right? Today's high is 98.77. That's higher than the previous day's high of 98.48. That's a higher high. That's bullish, okay? We refuse. I mean, this thing takes out like the previous day's low temporarily, as it did back here on Thursday, and just shrugs it off and new high. So this is a vulnerable area, yes. But our strategy of buying stocks that give us signals and rotating out of them quickly works well in this environment because we just put those profits into something else and the market carries it along, and that's great. But at some point, like we keep saying, this is going to turn. This is in a vulnerable location, and this is not a great place to invest. This is great for short-term trading. This is great for day trading. This is not good for investing because there's a lot of risk up here. This thing can easily pull back to this, what is this, 8,300? This low right here, 8,500, okay? This 8,500 area, maybe slightly higher. And that's a reasonable pullback. If the market pulls back, something like that, you better believe all the news outlets and all the blogs and all the other experts are going to be calling the market a short. And the market is just providing a healthy, normal pullback at such a level and buying opportunity for stocks. That's the investment point, okay? Not up here. So that's an important thing to keep in mind. Don't get complacent, and whatever you do, don't let fundamentals drive your decisions because they're irrelevant to market timing. Now, Carlos, hi Mark, just curious about your thoughts on S&P put to call ratio being at multi-year lows. Well, those numbers can provide some sentiment, basically ideas of sentiment. Being at multi-year lows, that means that there's no fear, right? Or people are complacent, which is hard to believe considering where we were just a couple of months ago, all right? So in a situation like that, that's typically a bearish sign when complacency is high. And that's that's what you use the VIX for, the VIX, which measures the, I believe the put to call or the put buying on the S&P 500. So typically people are complacent near a top and they're most fearful near a bottom. The opportunity to buy is when they're most fearful, okay? And the time to sell is usually when they're complacent. So again, all that does is adds to the argument that we're in a vulnerable position. Can the market keep going even though the S&P put to call ratio is at a multi-year low? Yes, the market can do whatever it wants. That's again another reason why I say don't get caught up in opinions. Don't say, oh, the market's too high, it's a short. Bitcoin's too high, it's a short, or whatever. That's what a lot of people do. They watch a news report, oh, I believe this, or they take a look at an RSI, oh, it says overbought, so it must be a short. You can't have opinions. The market's going to do what it wants to do, and when it's going to change, it will give us evidence. Right now, there's no evidence of a change, so we just let this thing run and do what it has to do, okay, and not get overly exposed in a vulnerable area. That's just the best practice. So I hope that answers your question there. Again, I talk way too much. Okay, so let's get into the next thing here. I want to take a quick look at gold. All right, now I'm going to skip the DAX. Unless you guys want to see the DAX, let me know, and I'll run through the DAX. But let's take a look at gold here real quick. Now, gold. This looks to be like it's setting up for a buying opportunity. Now, we have an inside bar, all right, and it pulled back. Gold is essentially in a range. Look at the low of Friday here, 1670. Again, gold serves as another great example of why you can't let opinions determine how you make decisions. Gold is clearly in a bullish trend, and fundamentally, gold should be going higher, right? With all the stimulus and the weakening dollar and all this and all that, right? Okay, that's great. So fundamentally, gold is strong. But if you believe that blindly and you're buying this thing at 1740, man, you got to sit through all this pain, Okay, and that sucks, especially if you're in the futures or if you have the CFD. That's a lot of pain to take. Okay, so you can't go by fundamentals, you can't go by opinions. Yeah, sure, gold is strong, but we need to see a clear setup and we need to be able to measure our risk. Now, gold is in a much better location. I'd much rather buy it in the 1690s or 1680s relative to 1730s, where we'd be chasing. So we have the inside bar. We have to wait for this to close because we follow our rules. The risk is going to be, a little high on this thing because of the way it moves, but it's not going to be as high as it was when it was up here. So the low here is what, 1677, and the previous low is 1670. So our stop would probably be around that 1660 area, something like that. And I'm talking about a new swing trade because we've had a gold position, a long-term one. But we're considering issuing a new idea, all right, for those that maybe want to get into gold now on this buying opportunity. So this is what a buying opportunity begins to look like. And again, do we jump in now? No. This thing could pull back to 1680 again, right? We don't know. So first we let it close and then we determine our risk. So that's if we're going to send out any idea, that's what you should be watching for on your phone. If we send out the text and the email, gold. All right, because there's plenty of potential now for gold to go back into those low 1700s to reduce the risk, take some profits, and perhaps we get the breakout leg from there. We don't know. All right, you can't predict that in advance. All we know is gold is at a range low. It's in an attractive area for a swing trade long, and we can measure our risk from here, and the potential is clear for the short term. So keep gold on your radar for today. All right. Obviously, if you send something like that, it'll probably be after our podcast. And we're going to talk about it again during the podcast. Now, I know we had some interesting questions about gold because a lot of our Eurozone members can't buy I believe it's the gold, the GDX instrument. I believe they can't buy that. There were some limitations there. So we'll talk about some alternatives. I know Andrew addressed that in the chat room, but we'll talk about that again in more detail because gold is in a great spot. All right, so that's gold. Now, let me take a quick look at oil next, because that's just been another one that it's like, wow, what a mover. So again, if you want to hear the DAX or anything else, let me know. Let's take a look at oil. So here's oil. As you can see, look, I mean, oil's just been nonstop, okay? And look at this ugly pin bar. That's not good. That could be a sign of a pullback right there. But we don't make a judgment on that. For one, it needs to close. And for two, even if it does pull back, we're not going to short something like this. We want to buy the pullback because this thing is generally strong. It took out this resistance back here, and the thing is strong. So, very short term, like if you're day trading or something, okay, fine. But if you are swing trading or a larger time frame, you can't go against this trend. If you did that back here, you got stopped out, right? So we're interested in oil long, but it needs to pull back, and this may be the beginning of the pullback. How you measure your reward risk really is very dependent on your time frame. So let's take a look at the USD WTI for a more normal chart. There we go. And I always do this. I always go over both oil charts because, we may have some people that are using Owanda. This is the regular chart that most people see. And again, we're finding resistance inside this gap, which makes sense, but we just need to see a pullback. Just like the euro, we need to see a pullback, and then we'll look for a long. No point in going against this trend. Now, if we get some sort of trend reversal pattern for perhaps a lower high or something like that over the next couple of weeks, then maybe it's worth giving it a try on the short side, because there'll be some potential there. But until something like that develops, not a good idea to go against it. So it's all about patience, right? Another thing is you don't have to trade both sides of a market to develop consistency or to show consistent performance. I get this question a lot, especially on TradingView. They ask me, how come you don't short Bitcoin? And, besides the risk reasons and the leverage and all that stuff, I say, you don't have to trade both sides. You can just work on one side and avoid the other side, and you'll do okay. You'll have less trades, but you'll also have less stop outs and fake outs. And that's really what ruins a lot of people, because then psychologically it messes with you. Okay, so that's oil. Got a question here. And DJ, yeah, I'll go over Cisco, sure, once I get into the stocks. No stupid questions, Nicholas, no such thing. Where do those gaps come from? That's a good question. So this basically, a gap is the market closes and the next day when it opens, this could have been a, let's see, is it, yeah, see, look at the dates, right? March 05 and the next is March 08. So what do you think happened there? So this is obviously a Friday and the 08 is a Sunday. So usually a market gaps when the market is, there's a dramatic move while the market is closed. So when the market opens, it opens at its current price, which is dramatically different because obviously we don't see price action on Saturday, right? That's where in these commodity markets, that's where gaps come from. Stocks, it can occur usually like overnight on the overnight action. If there's like an earnings report or something that's a surprise, the next day it'll gap. That's typically where that comes from. But it's from a closed market to an open market where the price has changed dramatically. And this is really bad, like when you're long and you have a stop, your stop gets skipped. So you'll be still stuck in the position and you'll be just losing money. And you'll be like, oh, how come my stop never got triggered? It's because it gapped. You have to be careful with that. So good question. All right, now, so that's oil. Again, waiting for a pullback there to buy it. And these sometimes when we don't see a clear opportunity, we'll just avoid because there's so many other places to look for opportunities, right? Like the month of May, we had a great Forex month because there was a lot of opportunity there. All right, so that's oil. Let's now take a look at, I wanted to go through a Forex pair, but I think we got them all. I was going to take a look at the euro real quick. And the reason why I'm taking a look at the euro is because we're interested in buying the euro, okay? Yeah, right. There was a lot of drama. DJ, on all that oil stuff. And oil typically is a very sensitive. It's very sensitive to geopolitical events, and it's a pain. It's very difficult to trade at times because of that, and can be very noisy. They also say there's a lot of manipulation in oil. So I don't care about that stuff. It's like, hey, just give me a level, give me a technical reason to get in, and I'll work with it. So here's euro. And we got this bearish candle, right? And it's starting to show this little bullish situation right now. But why won't we buy here? Okay, the reason why we won't buy is it's too early. This can this be a higher low and go higher? It could be, but the risk is just way too high up here. All right, we're near this resistance up in here. We don't want to buy near resistance. We want to buy near support. And the next relevant support is here, around here somewhere. All right, so that's like 1170s, maybe 1150 area. And we're fooling around right now at 13 even, 113. That's a couple of hundred pips of pain right there you have to take if you get in too early. I'd rather let that pain come out of the market and then look for the reversal. Again, if the market doesn't want to give us a trade, no problem. We'll find something else, right? No reason to chase something if the reward risk is not attractive. And that's like a key factor for our decision making. That's why Bitcoin too, we'll let it go. Who cares? Wants to run at 20,000 tomorrow? Go ahead without us. If we could not measure the risk and there's no clear setup, let it go. All right, there'll be plenty of opportunities elsewhere. Or, we just wait in Bitcoin. The euro eventually will give us more opportunities. That's it. So let's get into the stocks now. So I have Cisco. Let's go through Cisco, DJ. All right. And then we'll take a look at some other things. So again, if you're new to Greenbridge, make sure you check out our podcast today at 4 or 5 p.m. Eastern time. Feel free to chime in and ask questions. So here's Cisco. This is an old market stock, okay? And this is obviously, look, Cisco is going to follow the market. That's basically what it does. So when the market does something, Cisco will probably do something. And right now, it's made it back up to this high area. Now, keep in mind, the Nasdaq is making new, yearly highs, and Cisco is not. That right there is a sign of relative weakness. Although if the Nasdaq keeps going and the Dow keeps going and the S&P keeps going, this will have no choice and will keep going as well. But just like the Nasdaq, I wouldn't be buying Cisco here. okay, on this breakout. I would not, because again, you're running into all this risk from this range back here. And if there is a market pullback, this is just going to pull back. So again, trading something like this, you might as well trade the S&P or the Nasdaq, because it's pretty much going to behave in a very similar way. Now, where would Cisco be more attractive? Right here. And that's around that 43.5 level. So you have some room. You have a couple of dollars there, right? Which means the market needs to pull back. That's where I'd be looking for opportunity, not at these highs. This is what lures a lot of people who don't know any better. This lures a lot of Robinhood traders. Just buy it because, you know, it shows up on their radar. Oh, look, Cisco's making new highs. And they buy it. They don't realize where they're buying it. Not a good location there. All right, so let's see. Nicholas, could we talk about day trading for a minute? Sure. Day trading webinar, right, which I conducted a couple of weeks ago. You said now after many years you're good at it and that you had colleagues. Yes, that's correct. I have been researching and feel like there's a whole scam industry built around this topic with countless sleazy educators driving their... Yes, that's true. On the other hand, there are people that say that it is not possible to consistent profit as a day trader. Do you day trade at all at the moment? Yes, I do. Do you know of a legitimate educational program that is worthwhile? Okay, so good question. Good question. All right, so Nicholas, before I answer that, because yeah, day trading is a very interesting topic, and yeah, it is something I still do, and it's how I started out in this game. I just wanted to run through a couple more stocks here real quick, because there's some stocks that I just want to bring to your attention, and then I'll answer your day trading question, and then we can wrap this up. Okay, so you don't have to hear me talk for an hour. So let's take a quick look at Roku. Man, it's a good thing we didn't get out of Roku. I think Michael was asking about this, or on Friday, Michael brought this up because, you know, we had this pullback, and the question was, well, what should we do with this thing? And I said, look, you really, in this situation, and Friday looked like it was closing with a pin bar. And what I said on Friday was that pin bar is a good sign. On Monday, this thing should be higher, and it gave us what we should see. This is what we should see. Very nice, Roku. So we should close like this, and this thing's on its way. I mean, I would anticipate that this week we should at least reach our first target, okay, on something like this. So, but my thing on Friday was there are some times when you have to use your discretion. And what we usually do, and like I explained to a lot of people, we try to take ourselves out of the equation as much as possible, and we let the market determine the outcome. We had our stop at 98.70. We predetermined our risk at the time of the trade, and it's either the market's going to stop us out or we're just going to stay in it. Okay, and even though this thing reached a low of $100.28, which is, you know, less than what, $2 away from the 98.70, we just, hey, the market's going to stop us out. It's going to stop us out. But my point is, there are some times when you have to use your discretion, and it's like if it's pulling back like this, and you say, I don't want to sit through this pullback. I don't want to get stopped out at 98.70. I'm going to get out early. You can make that choice on your own, and when a new buy signal shows up, you just have to have the courage to get back in. Okay, but that can be complex. It's very easy to second guess yourself that way. That's why it's like once we determine our risk and we say, okay, look, that's how much we're going to lose, and that's what we factored in, and we're willing to lose it, and that's it. Let the market do the rest of the work. Let the market decide. It's too much work for us to do that, okay? Not only that, the psychological second guessing can drive you crazy. So remember, we have to watch lots of different symbols across many markets. We don't have time to sit there and like obsess over something like this. So, you know, we try to build that confidence in you that either, you know, you can make that decision. I don't like it, I'm going to get out early, or I'm just going to let it go to the stop and take myself out of the equation. You have to make that decision. Okay, so that's how we let this thing go, and now we're back up in this thing. This thing is wild. You have to understand, this thing is not like a nice, easy, stable stock, and we try to make that very clear. Today's high is 1040, right, and this thing's at 110.08 right now. We're along from what, the 109.50, right, from way back here. So again, great location, double bottom, pin bar, and now we have the market pushing highs. That market continues higher, this thing should be in good shape, okay? If the market turns and does something ugly, well, this thing will probably suffer because it's very sensitive to the Nasdaq. Okay, so just wanted to point that out. So nice, if you're still in this, nice hold. Now, another one I want to point out real quick is Jumia, Jmia, which is like the African version of Amazon or e-commerce site, whatever, Jumia Technologies. And we're going to talk more about this on the podcast today. I just wanted to point out the chart so that we're familiar with it. It's an inexpensive stock, and it's got some great structure. Now, it's going to retest. It's coming up to this $8.50 area resistance. So that can be, that can be obviously an inflection point. So you don't want to be buying this thing now, but this is definitely on the radar for longs. So we're going to talk about this. I just wanted to point it out now so you have a little preview. Another one I wanted to talk about really quick was IOVANCE, IOVA. Another one. Look at this. Look at that candle. Look at this price action. Look at the level. Look at the pin bar on Friday. This is actually a long signal. Okay. Again, we're not sending out all these crazy signals today because, again, we have a bunch of stuff on and we don't want to get caught with too much. But look at this thing. Okay. 31.53 is the high of Friday. And today we're fooling around 32.18. So we're going to talk more about this on the podcast as well. This will probably be our trade of the week. Again, you're dealing with risk measured around this 29.25 level, something like that, maybe 29 even, something around there. And this thing has some room to play with here. All right, so just keep this one on your radar as well. IOVANCE. Again, when these give buy signals for this type of trade, you don't have to be exactly on that buy signal. The buy signal was 31.53, so this is like what, 70 or 80 cents higher. It doesn't have to be exactly, but just if you're buying it at a higher price, you're taking more risk, right? So that's something you have to keep in mind, and perhaps you can adjust your share size based on that. So again, we're going to talk about that in the podcast. I just wanted to give you an idea. And one more real quick, let's talk about the pot stocks because they're getting high again. Okay, all bad jokes aside, let's take a look at what's that thing called? Chronos. All right, look at this. Look at this. Whoa, someone's smoking something. What is this all about? This stock was garbage for the longest time and hated. Okay, I mean, I even put some analysis on here that this thing was bearish, but that analysis is kind of goes a few weeks back. The general trend actually is bearish, because this $12 level is the key resistance. All right, and as long as it stays below that, we can't really expect a whole lot. But look at how the structure is changing. Higher low right here off this basically $4.95 or $5 area, another higher low here around this $6.50 area, and now we got the vertical candle. So this is great. We don't buy this thing now, but this is definitely a sign of change. We got too high. We got this big broad higher low, which took weeks, many weeks to play out. And believe me, these things were hated at these levels. And that's usually the best time to really start accumulating some. And back then I used to talk about these all the time, but then people got tired of me talking about them. So I just wanted to point this out that, there's a change, there's a structural change taking place. And these may be worthwhile now for swing trades or even accumulating some inventory on pullbacks. Not at these highs. This thing is getting near this resistance area, and you don't want to be buying it now. The point is, keep this thing on your radar. Okay? Don't forget the pot stocks. ACB is another one. That one was in a consolidation. I've had some good questions about it, and I've been telling people it's not a bad idea to just hold on to it if you got it. Okay? ACB. So again, and we'll touch on that too on the podcast. So let me get to this day trading answer here for Nicholas. Okay, so let's talk about that real quick, and let me see if I can pull something up like a day trading stock. So let me pull up the Nasdaq, because that's what I know Andrew said. The Nasdaq he mentioned that as a good instrument for day trading, and yes, it is. But that's the futures. Okay, let's go take a look here at the Nasdaq. All right, INMD. Oh yeah, well that thing's on its way. I wouldn't chase INMD. That thing took out its resistances, and that thing's on its way. So yeah, that thing, it's like you can't chase. But that one, you had to be patient with that one because that thing was stuck at like $24 for like the longest time. Now it's at $34, right? Did it like in 1 week. So anyway, there'll be more opportunities. So let's talk about this real quick and day trading. So your first thing is, your question is, you feel like there's a whole scam industry built around this topic and countless sleazy educators. Yes. So yes, day trading is one of those things where you'll see a lot of stuff like on YouTube where they'll say, hey, I'll show you these 3 magical setups and that's all you need. And just take my training and you'll make $1,000 a day from home wearing no clothes and all that stuff. Trade when you want, spend more time with your family, all that kind of nonsense, okay? There's a lot of that on there. Those guys are typically talking about inexpensive stocks, like from $20 to $2, those type of stocks. They're typically looking for momentum, which means they want news-driven stocks, and they have scanners. They always emphasize their scanner. And, a stock has a certain type of gap or something like that. And, okay, that's a stock that they're going to be working with today. And the gurus, a lot of them, they'll show these profits, and they'll say, wow, I made $20,000 today, or I made $10,000 in my sleep today. How? How are they doing that? Well, for one, when you buy a $2 or $3 stock and the stock goes up $1, that's a lot, right? That's a lot for such an inexpensive stock. But when you buy 20,000 shares of that stock, which is what they're doing, and it goes up $1, you made $20,000 in a minute or two, right? But if that stock pulls back 50 cents, you just lost 10,000, which, they don't really talk too much about that. They just say, well, there's a lot of risk involved in day trading. So that's where all those numbers, and they always push those results because that's what attracts people. You have to understand something, Nicholas, about this industry, and it's always been this way, okay? And the reason why I have this Nasdaq chart up here is because I'm going to talk about how day trading is relative to this. But this industry has always been that way. They capitalize on desperate people. There's a lot of people without jobs right now, and they are looking for some easy way to make money, and day trading is very appealing. You don't have to work for anyone. You can do it from your home at your own convenient time, and you can do it naked if you want, no clothes on, okay? You can do whatever you want, and you're free, and you can spend more time with your family. They all talk about you can spend more time with your family, okay? So that's the thing with those. You can't, and then they show these crazy numbers, and the people that they're appealing to are people with very small accounts, right? There's something called the pattern day trading rule. Most people can't trade because you need $25,000 at minimum to day trade. So how do you get around that? Well, there's these special brokers that are overseas that you can open up an account with a couple of $1,000s, but the fees are very high. And that's what these guys push you to do. So yes, there is a lot of that going on in this industry. So you have to be aware of that. If you're desperate from the start, like if you're like, I only have a couple of $1,000s to trade, and I want to double it or triple it in a few days, I'm going to day trade. Okay? If you're one of those people, right from the start, you can't win because you can't win if you're desperate. Okay? What that means is, for one, they're going to sell you education. So with your $3,000, they're going to say, okay, listen, give me $1,500, okay, and I'm going to teach you the beginner level, and then you'll have $1,500 to trade with, which is plenty. And you can buy 100 shares of some $1 stock, and you can start with that, okay, and try to make $100 a day or something. So that's what they're after. That's what the educators are after. They want that money. And they say, you might as well give it to me because you're going to give it to the market anyway. At least I'm going to give you something for it. So just keep that in mind. Now, that's where they're appealing to. My whole point of my day trading webinar that I did, which is free on our website, is why go through all that if you're one of those people when you can take your $3,000 and put it to work more effectively and not give half of it away for education and then give the other half away into the market with your mistakes, because it takes a long time to get good at day trading. If you ever look at the fine print on day trading websites, and I know I'm going overboard on this but it's a topic that's that I'm very passionate about. If you go look at the fine print, it'll say, so-and-so is, you can't expect to have the same results as so-and-so because, he's at a certain skill level and blah, 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 and this and that, and it takes a long time to become good at being at day trading. There's a lot of risk. They always have that in the fine print. So these guys are selling this dream, and it's possible, but it takes a long time. And that's the part that they don't really want to emphasize, because most people they would give up before they even begin. If I told you it takes 10 years to be good at as a day trader, then no, it doesn't. It takes only, 6 months. Just use this paper trading account here and you'll get good at it. No, it takes a long time. And that's trial and error. Takes about 10 years. If you have a mentor that's holding your hand every day, then yeah, maybe a year or two. Maybe a year or two of full-time day trading will get you there, okay? That's having a mentor holding your hand. So now let's talk real quick about this Nasdaq and why Andrew said it's a good candidate for day trading, because he got that from me. Now let's say you have enough money and genuinely interested in learning. How would you do it? Okay, well, you need to find a mentor, for one. You need to find an educator. Now, I don't have any specific ones I recommend. You have to do your research on that. There are some, like I worked for a firm that specializes in training day traders, but they're very expensive, number one. And what they teach is, you may find to be very basic. You're like, wow, I just spent $10,000 on these basics, but there's no secret in day trading. The key is working with your setups consistently and doing the same thing, having your very specific strategy, because for day trading, you have to have a very, very well-defined strategy. I mean, it has to be super precise as far as like your rules, like, when this sets up here, I'm doing this, and it's got to be exactly like that every time, okay? But at the same time, you have to be able to be flexible and not have any opinions about anything, because things change minute to minute when you're day trading. Now, and that brings up, well, yeah, thanks. I know I overdo it, but let me talk about the Nasdaq real quick. But to answer your question about who, Nicholas, you have to do research. You have to look for performance results. Hopefully, they can provide them, statements like what do you call it? Account statements. If there's a lot of hype and there's a lot of they're pushing this dream too hard, that's probably a red flag, because they're just after desperate people. You should also, if you find someone that has an interesting performance, or maybe they have a strategy that seems to appeal to you, you should observe them for a while. Also do internet searches, see how other people are rating them, see what kind of, you have to do all that. And that can take a month of research or more before you find someone that, okay, I'll give this guy a try. That's what you have to do. Well, at some point I'll get into that. You see, the reason why I don't get into it too much is because it'll open up like this whole, everyone's going to go crazy and they're going to want to know like all these things. And I don't have right now the time or the resources to really get into a lot of detail on that. Because remember, I've been doing this for 20 years. So I can see things and I can do things that I can make decisions basically in seconds that may take you a minute or two to figure out, and I can do it without hesitation because I know exactly what I'm looking for and I know exactly what I'm not looking for. So I can move quickly, and I can also adjust on, as conditions change, I can adjust very quickly, right? And that's a very key thing to have, that kind of flexibility at the same time while following my rules. So that's why, it's if I give a little information, I'm afraid people will go nuts and lose money. And I don't want that to happen, because that's usually what happens. Like, oh, he showed me how to use the CCI. And then you start using the CCI and lose money all over the place because, you may not have the same experience that I have. And I can see things in that CCI that, took me years to figure out that, you're not going to see. So that just comes with experience. Okay, so let me talk about this Nasdaq and why the Nasdaq. Okay, yeah, no problem. Let's see, how am I doing on time? I know I talk too much, but I still have people listening, so that must be a good sign. How am I doing here? 45 minutes. Wow, okay. So let me just talk about this Nasdaq real quick and why the Nasdaq. So I'm going to switch over to a 5-minute chart. Okay. So let's switch over to 5 minutes. And why 5 minutes? Well, this is a day trading time frame. All right. Actually, I will use smaller time frames than this, but this is kind of like a bigger picture time frame. Now, and today was an interesting day. So this is today, the Nasdaq today. And let's start from the open. Okay. Let's just go back to the open, which was right around here. Okay. So going into the open, here, let me get a little drawing tool here so I can highlight some things. Going into the open, the market kind of looked strong, right? At the open, it sold off. If you had any opinions here about long or short, like let's say you went into this at 9:30, oh, it's a long, okay? You got hammered if you did not get out of that or had a tight stop and got out of that quickly. This is actually a very big move, right? Now remember, these are 5-minute candles. So, and then from there, you may say, oh, okay, this market's a short. I'm going to start shorting it now. The rest of the day, it's making highs. So these, and in this section right here, what a lot of people say, okay, this thing's a short, I'm shorting it, blah, 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 this and that, blah, 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 breaks out, squeezes them out. So if you can't see, like it looks easy after the fact, especially the way I explain it, but the reason why I'm pointing out the Nasdaq is because, and a lot of stocks will follow this because they're following the Nasdaq, there's a lot of opportunity in something like this, and there's a lot of movement and there's a lot of setups in here, all right, especially you know, for taking small bites, and that's the whole idea. If you sit there and you're expecting, you know, a typical move on the Nasdaq futures will be like, you know, it changes. The typical move will change. So in a wild environment, a typical move will be 20 points in a minute. Now remember, it's $5 per tick or $20 per point on the Nasdaq futures. So 20 points in a minute, you do the math, it's a lot. In a minute, literally a minute. So, you know, you want to take a small bite. But if you sit there and say, well, I'm going to try to make 100 points, it's possible. But if you go in that expectation and you get caught in here, right, this is where you lose a lot of money because you're like, oh, it's a short. Oh, no, it's a long. Oh, no, it's a shorty. Oh, it's a long. Oh, wait, it's a short. Oh, no, it's a short. Wait, it's a long. It's a short. Okay, and that can really, that's the noise is what costs you all the money. When the market trends, you know, on these time frames and sticks to its trend, it's easy. But the noise is where you give it back, right? Especially if you have those high expectations. So adjusting expectations is such an important thing. So anyway, so that's a kind of a little bit of a little, I guess you could say, teaser on, you know, why the Nasdaq, because there's a lot of opportunity in it. Okay, on those smaller time frames. And like I said, many stocks will behave in a similar way. A lot of these day traders, like I said, they trade stocks between $2 and $20. They won't follow the Nasdaq. They'll follow more the Russell 2000, or they'll kind of do their own thing because they're being driven by news. But I prefer futures. I don't trade stocks. I don't day trade stocks. You know, the futures, there's a lot of advantages, especially when it comes to margin and stuff like that. But I've been doing it for a long time, so you really have to understand what you're dealing with. All right, so I think I answered that question in about, what was that, like a 15-minute answer? Okay, so, and he even said his time frame was, yeah, that's right. I'll even use, sometimes I'll check a 45-second chart. Okay, that's the kind of detail I'm looking at because this thing can move a lot in 45 seconds, a lot. 10 points it could do. That's a lot for less than a minute. So things change, okay? So let's see. I understand. Thank you so much. All right. Great, Nicholas, and we're glad to have you. So that's my day trading answer. Day trading is a good thing, but it takes some time to learn. So like I said, take the time, do the research. At some point, you know, we'd like to do more with education and offering stuff. But like I said, it's right now it's challenging. It's very tough to monitor all the markets that we monitor and get the signals out that we do. You know, doing the stuff that we do now takes up a lot of our time. So putting on another responsibility like day trading would be just not possible right now based on just, you know, our constraints. So great question. All right, everyone. So thank you for spending almost an hour with me. This is like one of our webinars. If you're new to Greenbridge, please check out our website, greenbridgeinvesting.com. We have webinars there in our webinar library. I have to put the most recent one I talked about was the oscillators. I have to put that one in the library, which I will be doing. But check that one out. It's free for everyone to see. If you have any other questions that I didn't address, please share them in the chat room. We'll get to them. And thank you again all for coming to this and asking all your questions. I really appreciate that. If you haven't subscribed to the channel, please do. So every time I do one of these, you know it's coming out. And that's pretty much it. So our podcast is at 4:05 p.m. Eastern Time. We'll have Andrew, we'll have Henry, and we're going to talk about Bitcoin again. We're going to talk about all the ways you can invest in gold, and we're going to talk about those pot stocks. Plus we have like that Jumia and stuff like that. So we're going to touch on all those things. I just gave you the show in advance. All right. So, but it's fun to listen to, and come in and ask questions. We like answering questions. Hopefully all of our technology works and we don't have sound problems. I know our show has been kind of a mess, but we work on it each time to fix those sound problems. So just, thanks for your patience on that. All right, everyone, have a great day, and I will see you then. Thanks for listening.